Mic check. ABC. Looks like we are good to go. Looks good there. Levels look good. All right. Let's get rolling. Good evening, everybody. A short week. Very impactful week today, or this week. So we're going to do a quick little round. I'm trying to keep this below 20 minutes today, so we're going to just keep at it and go straight to the charts. So weekly prep for this week. We've got our economic calendar here. We have Tuesday, Wednesday, Thursday, and Friday. There's something for everybody on each one of these. So employment cost index on Tuesday, JOLTS Wednesday morning, and final manufacturing PMI. Wednesday, you've got FOMC in the afternoon. So that is really going to be the biggest move of the week. We'll see the higher low of the week on Wednesday. That's what our profile will likely be, potentially with a continuation all the way through Thursday with unemployment claims and non-farm payroll on Friday. So it's going to be a very action-packed week. This is not a week for gambling. Be very, very careful on these times, as you all know, if you're new here. Hey, stock trader, good evening. Good to see you. As you all know, be very careful during these times. Be aware of these times. Make sure that you're maybe don't trade these if you haven't traded them before. If you want to, fine by me, but you will be gambling. So especially on FOMC and on non-farm payroll especially. So FOMC, generally it's a two-stage delivery, but the past few times there have been nothing but like it just gone. It's just like started going and it's just kept on going. So I don't foresee us seeing the same thing happen because we're in a really weird spot right now. So let's go to the charts and see what we got for this week, though, just to get us prepared for this. Okay, let me drag this over. And we're going to start on the weekly chart, as we always do. Heavy duty, rough week. Yeah, I think it's okay if you can frame it in the mind of like, hey, we have a lot of high impact things that could mess us up. Well, that's something to consider, right? So what do we have here on our weekly chart? So on our weekly chart, and let me get rid of some of, well, we'll keep those on for now, but on our weekly chart, remember last week, we were anticipating us heading up into this midpoint area. Well, there's a weekly imbalance up here. So if you can't see that, let me unlock that. You've got a weekly imbalance from that high to that low of that fair value gap. So whatever this high was, 17901.25. That's something we want to see on our charts. And then also the low here of 18054. Lock those so I don't move them on accident. Okay, so now we have these weekly levels, and these will show up on our daily levels. So we know that this is the most obvious first part of the week to take. Hey, good evening, LP Trades. Good to see you. Trying to keep this super short. I don't want to make this a long one. Because we all know what's going to happen Wednesday, FOMC, Friday, non-farm payroll. Those are where the majority of these moves are going to happen. If you're not trading sometime in the 6 a.m. to 8:30 a.m. / 9 o'clock a.m. time frame, best to be really careful as you get closer and closer to Wednesday. Wednesday afternoon, you don't want to be trading after 10 o'clock, especially not after 11 o'clock. And you want to wait to see what moves unveil come FOMC statements. Hey, WEF, good to see you. Okay, so we know that this is a weekly area that will likely be targeted. So the thing about this week, we're right in the middle of a couple of weekly candles, and this was an inside candle. So this means there's a lot of price waiting to be coiling down to move in one direction or the other. Now, if we zoom out, one thing for all of you bears out there, I'm not convinced that it is fully bearish yet. For me to be fully bearish, I would need us to drop below this intermediate term low here. I don't see any other intermediate term lows yet. So yes, can it drop all the way down here and feel really badly? Yeah, absolutely it can. Will it? Well, we need to see if price trades up into this weekly imbalance first and goes no further than maybe the halfway point, or maybe it wicks up into this area. Maybe we see a wick up during FOMC or non-farm payroll up to here, but I only see short-term lows which have been taken. So while I'm not convinced it's going to remain bullish, I've seen odder things happen during election years. So I'm not completely eliminating it from the realm of possibility that on a higher time frame chart, like look at the monthly chart, for example. So we had a monthly chart displaced below this. We traded up institutional order flow entry drill on this third month here, and then for the next 1, 2, 3 months we traded lower into a bullish order block, and that's where we consolidated. Right here we have pretty clean charts on the monthly chart. We have an all-time high, we had a bullish order block, price traded up, back down into it, and then continued higher to take out this liquidity here. Now, a drop like this for the month of April means that we're likely going to end the month of April with some kind of a down close candle. I mean, could it trade all the way up here? Yes. Is it likely to? Probably not. It can, but we see that we haven't quite seen a drop below a monthly short-term low. Now, if this month creates it, and maybe May's does drop down there, it doesn't have to give us this signature here. I'm keeping my eyes out for that, but right now we're at a premium where we've taken over a previous all-time high and we've started to trade below it. So if we see a candle close, beneath this high in the month of April, that's going to signify to me that, hey, it's time to look for some maybe shorts and market structure shift to the short side. So let's go down to the daily chart and see what we have. LP trades, I know a lot of traders that are decisively bearish, yes. And that's exactly the type of move that would get traded into. There's still some premium arrays above us. Obviously, there's this daily sell-side imbalance, buy-side inefficiency. There's this volume imbalance, which is also in a premium. And we don't have a new dealing range, but we can make use of this range here. In fact, if I'm using it for fib retracement, thinking it's going bearish, I would probably use the bodies here. And I would expect for price to reasonably get into optimal trade entry zone up here and hit that before dropping. I would need to see a really quick drop from this and really, really fast movement down towards this area for me to maintain a bullish stance. If it doesn't do that, it can, and in hindsight, it can reach all the way up here, and if it just keeps on going, it could use non-farm payroll to tackle all of this out as well. So yeah, I think LP trades likewise good. So I do think that the easier draw on liquidity is up into this realm here. So Monday, Tuesday, if it doesn't reach all the way up into here, there's a good chance it's going to reach up into there. Now, keep in mind that we have those the dotted orange line here, and then the solid orange lines, those signify the weekly imbalance that is remaining, right? So there's a weekly SIBI there. So price could certainly trade up into this area. I think that taking longs up into this area is definitely a reasonable movement, but I think that's also potentially the Judas swing if we truly are bearish and we reject from this midpoint, which is also the high end of the weekly sell side imbalance. So keep those on your charts, at least write those numbers down. They'll be important and they'll be referred to this week. We are at a bearish order block on the daily chart, but there is a fair value gap above it. Oftentimes, if there's a fair value gap and we're bullish temporarily, we can see price trade through that order block and tackle fair value gaps and even this volume imbalance, which is at a previous new week opening gap. Okay, so this, I think, these two are my core draws on liquidity. Particularly, I like this SIBI high. Can it go up to the volume imbalance? Yes, absolutely. And it hasn't candle closed through those, so I fully expect it. If it goes up there, it might come back down first. But yeah, that's what I'm looking for on the daily chart. So a movement higher, and then we need to wait and see what happens during FOMC. Maybe this all happens on Monday, and then it comes back to new week opening gap as well. That could be a possibility, right? So, for example, we have new week opening gap showed up roughly around here and here. So what is this? Close was 17,837. Solid. So we're going to mark that on a different chart. And then the opening price is 17,864.50. Okay. So we have that new week opening gap on our charts. We can label this as an old one so it doesn't confuse me. This is all the things that I do on a weekly prep, right? You're going through it with me. You're going through the same consistent flow as we prepare for the week. So, again, so you can use this daily optimal trade entry to see that optimal trade entry. The most obvious confluences happen to be here. What is this? An up close candle before a displacement lower. This is a bearish order block. Within this area, you have a volume imbalance up here. You've got the high of this sell side imbalance. You even have the high of this weekly imbalance here as well. So those don't touch nearly as much, but they're close enough together where it's reasonable for price to trade up to that to pick up more orders, right? So that is what we're framing the first part of the week. The second part of the week really will depend on what happens during those rate announcements. On Wednesday, if there's any discussion of a rate cut, which is highly unlikely, given inflation prints, PCE prints as well, Fed's in a really weird spot. So I don't know if they're going to keep rates stable or if they're going to announce a rate hike. If they announce a rate hike, that would give me enough for me to go heavily short. Market will likely price that in as well. But what we'd like to see when we're bearish is we like to see a really quick spike up, and then we start to see movement lower. So framing for the week, I am framing that we have maybe a rise up into this area, and then we drop down again, potentially into this bullish order block, and then we'll see where price takes us, whether it takes us all the way back up or if it decides to aim for the 16,582 IPTA low. Okay, so we have to wait out Wednesday and Friday's economic events. Those are what's going to cause the most damage. And honestly, the entirety of FOMC I've seen this happen before. So on Wednesday, you have FOMC rate announcement. But on Friday, I've seen non-farm payroll and combined with unemployment rate on Friday, I've seen that completely erase any FOMC runs. So that is another if-then statement that I will be looking for. I will be using lower time frames during the economic events themselves to observe what's occurring on price. And then I'll frame it all with this: if bearish, I'll trade up into here, then lower. If bullish, then I'll trade up into here, maybe trade down Tuesday or Wednesday, and then trade higher for Thursday, Friday. Maybe consolidate Thursday, Friday, all the way higher. So we're framing two situations which could happen, and we're going to be thinking about price in that way. we already see that the previous day traveled down into this bullish order block. So it wouldn't be a surprise for me to see us continue higher. That would squeeze a lot of shorts out, I think. So I don't know where max pain is, but I haven't seen major intermediate term displacement lower yet. So I want to see where this candle closes on the monthly. If this monthly, again, really key here, really important here. If this monthly closes below this short-term high, sorry, this intermediate term high, then I will consider the market structures shifting. It's okay. Okay, so that's as far as I really need to go down. I don't really need to go down in the 4-hour chart because the daily chart's enough to frame where we're thinking about moving. And in Asia, there hasn't really been much of a move. We can kind of see how in Asia we started off. We did not trade to the midpoint of this liquidity void, of this fair value gap. Sorry, the new week opening gap. And so the midpoint's right around here. We haven't traded to it. And there's still a bit of gap left to be taken. So at some point, you can kind of see we just took buy-side liquidity here. At some point, these relative equal lows will be targeted. This liquidity void will be targeted. And so that's what I would be using as a target on the bearish side if I am bearish. But for now, looking at the 15-minute, we kind of see this kind of consolidating around here, right? So we need to see if it's willing to go up into that weekly sell side imbalance, and how does it react when it gets up there? Because remember, this is the weekly equilibrium level. That orange dotted line there, we pointed that out last week. So if you missed that, go rewatch Sunday Prep or any of the live trade sessions. But once we get above here, it would be reasonable for us to look for shorts. Can we get squeezed out? Yes. Is there a seasonal tendency which supports us going short? Yes. The month of May, generally, we will be bearish. If the month of May is extremely bullish, that's going to lead to a ridiculously, no technicals, bullish year. So we'll see what happens there. So those are the two. That's how I'm framing the week. Feel free to agree or disagree, but that's how I'm going to be framing the week. And that's what price action I am going to be looking for along the way there. I do see that there's a lot of pink lines I need to clean up here. So I'll probably be cleaning those up in a little bit if I can. But those are all real-time hour gaps, essentially. So there's some real-time hour gaps to the downside that never got filled either on the previous day. I still think that the Fed still wants to cut once at least this year. Yeah. The problem is if they cut and inflation levels aren't back down to their goal of 2% CPI, then they're going to be in trouble, because you're going to have everything booming then in the stock and indices markets. You're going to have inflation going up again. They're just going to have this brutal cycle of rate hikes. And what are they going to do? They're going to have people have major credit events. Banks are going to have to step in to save the day. And then you're going to have the Fed adding liquidity to the markets to not have the markets crash during an election year. I've seen this happening. So we'll see if that occurs. But yeah, one cut, that's when people will see probably a rise similar to the speed of a lot of people have been mentioning a dead cat bounce here and citing similarities to 1987, worth reasonably looking into. LP trades thinks they'll have a 4%. I agree. It's gonna, and that CPI is a rate of change of CPI. It's not actual. If you count from 2020 till now, how much has the price of a burger, or milk or eggs increased? The total increase is at least 25%. right now. But they don't promote that. They just say, oh, inflation, meaning CPI, has gone down from a rate of change of point, whatever, 4% to 3% to 2% or something like that, right? So, all right. So I think we need to see how Monday plays out. There's nothing economic event-wise on Monday. Absolutely nothing. So I think Monday's going to be a normal trading day. You could probably find, 10, 20, 30 handles on NASDAQ. And then I think that because we have an inside bar on this week, we're going to see a fairly large movement either to the upside or downside. So we'll see. All right, team. It's getting late for me, so I need to get some rest and get some more water and stay hydrated. So I think that's going to be it for me this week. We're going to keep it higher time frame. I will rely on you all to look to your lower time frames for entries when it actually gets to the trading day. One reminder, ICT is going to be running a workshop live streaming Monday through Wednesday this week. So go check him out. He is who I learn from. I will not be able to watch all of his stream, but I'll probably watch it after the fact. So, yeah. So with that, I think that's it for me. Thanks for watching. Appreciate you coming in and discussing LP trades. I think it's too high to continue manipulating. Yeah, agreed. Yeah. WAF, thanks, Johnny. Yep. So we remember, we know, and let me go back to this once more before I head out, because it's really important we pay attention to this week. That economic calendar account, like, I think the 8:30 before 9:30 a.m. is going to be good trades this week. Wednesday, you want to be done trading by 10 o'clock. If you don't catch any of this at 10 o'clock, after it gets to 11 o'clock, you're done. You just need to wait until the 2 o'clock rate announcement. And then we'll see how it delivers, right? You need to probably be looking above and below 200 to 400 handles. Where are the targets, where we're at right now, where we opened? So 866, 800, is that 866? Yeah. 817,862. So about 18,000 is where it would be a reasonable 18 to 18,100. I think that's a reasonable area for FOMC or pre-FOMC to target. And then below us, we could range anywhere from 17,800 to 600 to 400 if it decides to go lower. I'm not convinced yet, but this is very large of a drop, so it's possible. If this continues spiking higher, then we'll end up seeing another high. So with that, thank you all for hopping on for weekly prep. We will adjust and adapt on the coming days. This first part of the week is really, really heavy for me, so you're going to see a lot less from me in the beginning of the week, but hopefully it dies down once Wednesday and Friday come along. So good luck this week. I know you're going to do great. And yeah, well, I'm gonna keep building up these PA accounts and aiming for maybe a first few withdrawals in the coming months, hopefully. So take care, everybody. Good night and get some rest. We'll see you this week. Take care. See ya.